With economic uncertainties ahead at least in the short term and a broader market downturn in the last few weeks, Indian equity market analysts are now signaling a shift toward blue chip stocks. This because of one crucial metric, valuations. As per experts, large cap stocks offer a safer option for risk-averse investors. However, that doesn't mean that small cap and mid caps are totally out of flavor. Let's understand. Basically, in 2024 so far, Nifty 50, which comprises of large cap companies, have given investors a little over 10% returns. Nifty mid cap and small cap have given 20% and 19.6% respectively. But due to this, many small and mid cap stocks are now highly valued and return potential is lower. Nikesh Shah, the Chief Investment Officer and Motilal Oswal AMC, says that over half of mid-cap index stocks are trading at a PE ratio of above 40, which indicates that these stocks may be in overvalued territory. He says that while some mid-cap and small-cap segments still offer a reasonable risk-reward ratio for investors, large-cap stocks provide a much better safety in a low-growth environment. Other experts echo similar thoughts that blue-chip stocks look more promising right now because they can provide stability during a temporary economic slowdown. And it's very possible that this economic softening may be short-lived. But to weather the storm, experts suggest blue chips are balanced choice. Vaibhav Porwal, co-founder at wealth management company Deserve, says that blue chip have robust fundamentals and resilience. In contrast, mid and small cap face greater risk of correction due to higher valuation and sensitivity to economic shifts. Also, increased trading in small and mid-cap stocks this year sparked fears of a bubble in the making, because these stocks are riskier during tough economic times. India's market experts and regulators are optimistic about the country's growth prospects but have flagged geopolitical factors, including the Russia-Ukraine war and escalating tensions in the West Asia as key risks. As per Rakesh Mantri, the CIO at White Oak Capital Asset Management, the Nifty 50's total return index is largely in line with the earnings per share growth of Nifty companies. While the returns are above long-term averages, they are not outlandish or suggesting any bubble, he says. However, this doesn't mean that small and mid-caps are totally out of flavor. As per Anirudh Sarkar, the CIO at Quest Investment Advisors, these are both overvalued and reasonably priced stocks across all market segments. Good quality, high-earning growth small caps and mid-caps would give higher returns than blue-chip companies. However, the returns might not be linear but would be more volatile, he says. While over the last year, it has been harder to find stocks that haven't turned multi-baggers. The next leg in Indian equities bull run is expected to be stock pickers market, according to the market experts. In order to beat the benchmark, fund managers of actively managed small and mid-cap schemes also reduced their holdings in such stocks since the beginning of the second quarter. Similar sentiments were echoed by the experts that Mint spoke with on camera as well.
Yes, the economy seems to be softening. I think the earnings that have emerged in this quarter so far clearly point to a softening in the economy. And yes, therefore, the broader market seems likely to correct. But I think large caps will correct less than small caps. And across the piece, across large and small caps, quality I think will correct less than low quality names, which had a blockbuster run through 22 and 23. But don't invest in companies where the books aren't clean, the promoter's track record of high quality capital allocation isn't well established, and the balance sheet isn't rock solid, right? Now, if you then say, look, Saurabh, here's three portfolios, large, small and mid, each of them high quality, which one would you go for? I would unquestionably say, go for large caps in this sort of circumstance.
And within equity, focus more on quality over momentum, focus more on large cap over mid cap or small cap, and focus more on reasonable valuations than expensive valuation.
Our thoughts flow from valuation. Based on valuation, we have much more comfort in large caps, very limited comfort in the mid and small caps, primarily coming from the valuations at which those companies are trading. They are already factoring in future growth. Now people keep saying, oh, but growth in India will be the fastest. Yeah, that's true. But then that is already captured in the valuation. you cannot expect that you will buy pricey equities and benefit from growth. That is a bit of a challenge at an aggregate level. Large caps is more relative comfort as compared to the other two. But the themes that I would really talk about would be what I said earlier. Growth is where we think the bigger opportunity lies in today's market. There are other sort of, you'll always find in some segments of the market there could be individual stocks, but I'm not sure there is a theme in a sense that I can pull out of that and tell you that there is a big theme over here. Banking is the only other one where I think these are the best balance sheets we've seen going back almost 2 decades. And I think in a country like India, credit is still under-penetrated. Whatever RBI may have concerns about certain consumer credit having grown faster than anticipated. But if I think over a 5-year, 10-year period, I think credit is an industry which will grow much faster than underlying nominal GDP growth. So these starting valuations give you a lot of comfort.
Compared to say small cap, or at least say compared to mid cap for instance, maybe large caps would outperform. Small cap is a very big universe. We consistently keep getting new ideas. So let me not generalize on small cap because the universe is really big and there is always new ideation happening. But mid cap is a very constrained universe, right? So I would say you should be in large cap for that matter. The last 1 month, large cap is outperforming mid cap and small cap. So like I said, I'm very bullish on consistently new ideation keeps happening. But I think mid cap, for instance, has gone up a lot. Large cap, there is good potential because if you see last 5 years, Nifty has given some 18% compounded, which is higher than average, but it's not like crazy. And in those 5 years, even the earnings of Nifty has compounded 18%, right? So I think the large caps, the top 100 stocks are still okay. Small cap, I won't generalize because there is consistently new ideation happening. Mid cap has clearly gone up a lot.
I think if you look at India over the next decade, it's an opportunity of a lifetime for investors. When you see this kind of growth in economy from 4 odd trillion to 10 odd trillion, you will see a meaningful expansion in market cap. You will see meaningful opportunities getting created. You will see the universe of listed companies getting expanded, a booming IPO market. All these things are going to start to happen. And the greatest thing about India is I don't believe it is a single sector economy. It is genuinely a multi-sector economy. So I think the run of Indian equities over 10 years, people will make money. And that's why I tell people, अगर आप 10 साल की SIP कर रहे हो किसी भी फंड में तो आप पैसे बनाओगे, बट आपको 10 साल रहने की हिम्मत होनी चाहिए. If you ask these questions over a shorter term period, then is volatility, is drama part of the package? Absolutely. And within this bull market, are there pockets of exuberance? Of course they are. They are in every bull market.